Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today. I have a video for you about a company, Gold Resource Corporation. It's a company that I've followed for several years. They're a gold mining company, go figure, and a company that I think really offers great prospects, offers a great risk reward profile. And I just put together a ton of information over the last year. So I'm going to share it with you today in the form of a PowerPoint presentation, and you'll get to listen to some of my commentary. Of course, I have to say, don't make any investment decisions based upon the information that I present to you. It's a company that I really like, that I really think is going to do well. However, not to brag, but if you look back at my past videos over the last year, I put out a negative video about 3M and a negative video about AT&T back in the February-March timeframe. Both of those stocks have gone down since then. And I put out positive videos about Antero Resources and First Mining Gold, both of which have gone up multiples from the time when I put out the videos. Another company I was very interested in is JCPenney. I kind of put out a mediocre video about them. Wasn't sure if they were going to make it or not. And unfortunately, because of COVID, they've ran into some very difficult times. So enough about that. Back to Gold Resources Corporation. Gold Resource Corporation, not resources. For years, I called it Gold Resources and just recently realized I was mispronouncing the name of the company. I do know the stock ticker symbol, GORO. You can go online and do a lot of research on your own, but a very unique company, no debt, was started by the current CEO's father and uncle. I'm going to go through a lot of details in the video. I will warn you, my wife likes to refer to me as Repeater Ron, so I will most likely repeat myself. You can always mute the video if you get tired of my voice and just read the information that I have. I think there's 8 PowerPoint slides. And I hope you enjoy the video. I appreciate you watching, and let's get into the presentation. Okay, guys, let's dive into the presentation on Gold Resource Corporation. I put this together on October 14th. Today is Friday, October 16th. Not a lot has changed in the last 2 days. The stock went up at one point, I think, to about $3.20, and I just checked this morning, Friday morning, it's back to a little bit over $3. So let's move on to the next slide. Okay, this is, I keep some cards in my wallet where I keep notes on different companies that I research and have an interest in. This is one of those cards, and this compares Gold Resource Corporation in 2016, September to be specific, to today. So back in September of 2016, they had one mine in Mexico, their Mexican operations. Gold was trading at about $1,300 per ounce, silver around $15 per ounce, and the company had a total market cap of about $400 million. Today, the same company has 2 mines, the Mexican mine, which is as good or better as it was in 2016, and the Nevada operations, which are up and operating, and I'll talk more about them later, but doing really well. The price of gold in that time period went from $1,300 per ounce to $1,900 per ounce, almost 50% increase. Silver's gone from 15 to 25, which, I don't know, 66% increase. And the market cap of the company has gone down, which makes no sense. They have almost twice the production with 2 mines. You have significantly higher gold price, significantly higher silver price, yet the market cap of the company is about roughly half of what it was in 2016. So this makes a real strong case for this being a deep value opportunity, of which there aren't many in the junior gold mining sector. Seth Klarman, I guess it is, talks about, buying stocks that have minimal risk to the downside. And at the current price, my opinion is that this stock has minimal risk to the downside and significant opportunity for price appreciation. Just final notes on this slide. Nothing changed from 2016 to today, except, the Mexican mine improved, the Nevada operations came online, gold prices have gone up, silver prices have gone up. The only thing that changed is, for some crazy reason, the market cap of the company has essentially been cut in half. I'm going to move on to the next slide. Okay, this compares the first half of 2020 versus the second half of 2020. What I guess you would say kind of see as some opportunities for the company. So Q1 and Q2 were challenging for gold resources, for a lot of companies in the mining sector. First and foremost, with COVID, the Mexican mine was shut down for the months of April and May. So essentially for April and May, 2/3 of the second quarter, they had almost no production from the Mexican operations. Now I imagine that even in March and certainly June, in June they reopened the mine, but that was under, the new COVID protocols and kind of getting people to the mine. That June was a challenge for them as well. And we know that the third quarter was a little bit of a challenge for them with Mexico as well, as they kind of, got their wheels together in terms of how to deal with running a mine in Mexico with the COVID situation. The other thing that happened in the first half of the year was that the zinc price cratered. Gold Resource derives a lot of their revenue from zinc, and we had a real collapse in the zinc price. And on top of that, the money that they have to pay to have the zinc kind of processed to a point where they can sell it, it's called zinc treatment charges, or TCs, you'll hear it referred to as. They went up, I believe it was record levels. So you had a situation with zinc where the price cratered, and then on top of that, they were paying a significant amount of money to have the zinc processed. The other thing that the company was dealing with in the first half of the year was the ramp up in Nevada. The mine, they're progressing towards what's called the Pearl Zone, which is where the richer ore body is in the Isabella Pearl mine. And to get to the Pearl Zone, they had to go through the Isabella area, which has gold in it, but not nearly as concentrated as they are expecting to find and now have found in the Pearl deposit. Gold and silver prices were, decent during the first half of the year. So if you compare that first half of the year to now Q3, there's a lot of positives that have happened in Q3, and I anticipate also will happen in Q4. Number one, the zinc price has recovered. It's back to about $1.10 a pound. So that's really good. I think it got to as low as 80 cents per pound, but now it's at $1.10 per pound. So that's great for Gold Resource Corporation. The Mexican mine is open and producing. We do know that they produced about 5,000 ounces in the third quarter, which was a little bit under what they do on average. But like I said, they were still dealing with running a mine, getting it back online after being shut down, and then also dealing with all the protocol and challenges of getting workers in during this COVID situation. The Nevada mine during the second half, we're expecting some great progress, and we definitely got that with the third quarter production report, almost 8,000 ounces. I'll talk about that later. And the gold and silver price have gone up significantly. So what's exciting about this little slide or note that I have here is that almost everything that was a headwind for them in the first half of the year is now turning into a positive or a tailwind in the second half of the year. The zinc price is up. The Mexican mine is open and running, and I anticipate will in Q4 Now that they've kind of become accustomed to running the mine in the COVID world, we'll see even a better quarter in Q4 than we did in Q3. Nevada, so exciting. The amount of gold they produced in the third quarter, almost 8,000 ounces. And hey, gold and silver are up. I think in Q3, gold was up almost 200 on an ounce on average, right around 1,900 an ounce, which is where it is today. And silver had a big run up. It's almost at $25 an ounce. The only negative is the zinc treatment charges, the amount of money they pay to have zinc kind of processed to a point where they can sell it. That's an annual contract, and that will continue to be a bit of a headwind for them throughout the rest of 2020. The other notes on the bottom, things to get excited about. And let me back up. Again, everything in Q1 and Q2 that was a headwind, with the exception of the zinc treatment charges, is becoming a tailwind in the second half of the year. Definitely was a tailwind in Q3, and we anticipate Q4 that they will be, rowing the boat with the current. They've got a favorable environment going on. The notes on the bottom, other things to get excited about: exploration. They're doing some drilling right now. East Camp Douglas. I think they're going to move on to Golden Mile after that. 7% insider ownership. That's this company was started by Bill Reed, who is the current CEO, Jason Reed's father. Bill Reed and then his brother, so Jason's uncle, started the company. Sorry, I don't know the uncle's name, but 7% is a high level of inside ownership for any company, and certainly assures you that you're, as a stockholder, that the management of the company, their interests are in alignment with yours. Another interesting thing about Gold Resource Corporation is they've had 9 years of profit. So, good management that created 9 years of profit in the precious metals mining industry when almost all the other miners were losing money at best and going bankrupt at worst. And something that's always attracted me is zero debt. They have zero debt, which is something that I believe in on a personal level, and certainly find that to be an attractive attribute for a company to have zero debt. We'll move on to the next slide. Just a few other quick additional notes. I found this interesting during I believe it was the Q3 2019 conference call. A long-term investor, in a very truthful and genuine way, said something along the lines to Jason Reed, the CEO, that, "Jason, you've always delivered on what you said." From what I've gathered from doing extensive research on this company, they tend to definitely err on the conservative side with their estimates, with everything. And, I found that kind of heartening that long-term investor, somebody who'd been invested in the company from day one, paid Jason and the management of the company that high compliment. Just a quick side note, and I won't dwell on this too long, but Gold Resource does not, they're not out raising capital. They're not out raising debt all the time, or, raising capital through the debt market. They're not out raising capital through share offerings on a regular basis. So there's been a lot of attention paid, and especially in the last 6 months, to these junior gold mining companies. The investment banks make big fees when they help these junior gold mining companies issue debt and issue more shares. So they've tended to focus their attention and their research on these other companies, which paradoxically are the ones that are needing to raise money, raise debt, and raise stock and issue stock. They're the ones that usually aren't in that great of financial shape. So there hasn't been a lot of attention paid to Gold Resource and companies like them that aren't out there trying to, sell some grand story to be able to, issue $50 million worth of new stock and dilute their shareholders, anything like that. So I think that's an opportunity for GORO. They've kind of been, cast aside a little bit, but in the long run, the cream rises to the top. They mine in good jurisdictions. Low oil is very good for gold miners, and we've had kind of sustained low oil prices, especially from what I understand for the open pit miners, which the Nevada operations are of that nature. It's a large open pit gold mine. The grade now in gold business is about half of what it was 10 years ago. I heard that said a few weeks ago, and Gold Resource is known for having high grade deposits. I'll kind of skip over these other ones. They're just kind of general macro points regarding gold, but double positive for gold. When the generalists come in, I think right now I've heard it's like 0.5% of investable capital is in the precious metals investment area. If that were to double or quadruple, that could really send a lot of these stocks skyrocketing. And there'll be a lot more dollars out there from all the money printing. And obviously, the final point here: if you double the number of all currencies, meaning if the number of dollars double, the number of euros double, the number of yen double, the price of stuff, tangible stuff, doubles, and that includes gold. So the currencies can remain stable against one another if both the currencies are being printed at close to the same rates, but that does not negate the fact that printing by the ECB, by the Federal Reserve, everybody else, in the long run is going to inflate the value of real assets, and that includes gold. Gold, the center of the financial universe. Okay, the company recently announced that they will be splitting or spinning off their Nevada operations as a separately publicly traded company. And that was greeted with mixed reviews by the investment community, but I think it's a great idea. And let me just kind of quickly read through what I put together, which kind of hypothesizes on what a market value would look like for the standalone entity. How will the market value the Nevada mining unit as a standalone entity? We know they will start out with a new name and 10 million in cash. So 10 million divided by 20 million shares, which is the number of shares they're anticipating on issuing, or actually not issuing, but distributing to the current shareholders. $10 million divided by 20 million shares starts us out at 50 cents per share. Let's hope it gets better from there. But wait, there'll be a debt-free company with an operating mine and a huge land package in the Walker Lane district of Nevada. This little mine in Nevada is so far producing to forecasted levels. And we know that from the third quarter report, it's actually, I think, doing a little better than expected. Nonetheless, 2021 should see a 40,000 ounce gold production number at a cash cost of $650 per ounce. For fun, let's just say their all-in cost is $1,200 per ounce, and they sell the gold for $1,800 per ounce. That would result in a $600 per ounce profit margin. If you multiply that by 40,000 ounces, that's 24 million in profit. If we knock them for some overhead of 8 million, we've got 16 million in profit left. And then if we take out 6 million for taxes, we have $10 million in profit. Again, that's at 40,000 ounces, which at this point looks very achievable. 40,000 ounces, that looks very achievable. And that's at $1,800 gold. So next year, based on my back of the envelope, kind of very rough estimates, we could see 10 million in profit. So to recap, we start 2021 with 50 cents per share of cash. We make another 50 cents per share profit because we made 10 million in profit. So at the end of 2021, we should have 20 million in the bank, or about $1 per share. Again, that assumes $1,800 average price for gold at 40,000 ounces of production. Now, if the market is generous enough to pay a premium for those profits, which they will, they might give us a PE ratio of 10. And by the way, I looked at some other gold miners this morning that are producing, and I saw PEs generally in the 15 to 20 range, but we'll be conservative and say 10. If you apply the 10 PE to a 50 cent per share of annual earnings, you get a $5 stock price. And again, that's just for the Nevada operations alone. Now, regarding the Mexican operations, let's not forget, we're going to have this new Nevada company, but the kind of legacy gold resource will still be in existence, and it will be the Mexican operations, just like the company was in 2016 when they had a market cap of $385 million. So let's talk a little bit about the Mexican operations. I'm going to read this to you. This is actually, I stole this. This is from Yahoo Finance, from the Yahoo Finance message board for Gold Resource, written by a user named Dan. So I hope Dan doesn't mind that I'm going to read what he wrote about the Mexican operations. He says, agree with you, but think it's important to add that the Mexican mines and potential are being underappreciated, and market has misinterpreted the main reasons for the split to conclude that management is dumping the Mexican unit due to various theoretical and imagined problems, such as tax burden, depletion of reserves, and who knows what else. Folks, nothing has changed with the Mexican operations, and they have a great track record and a great potential in their own right. I don't do this full time like Joe to keep up with it, but good time to address another one and blah, 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 blah. They're following the same strategy, that is the Mexican operations, they started with and have grown reserves, mine life every year, and published that in March and April. They've done this with partly due to favorable geology and just drill as they go. So that's one of the knocks on gold resources. Oh, they don't have a bunch of reserves. They don't have a bunch of reserves. They've never had a bunch of reserves, but they are confident, very confident. They have 4 years of reserves, but they're very confident that they have more than that, and they kind of drill as they go. Currently, they're on the books for over 4 years, which is the high end where they've been historically, after more than 10 years of production in Mexico, and have stated emphatically in presentations and conference calls that they have many more years and have many target zones and identified deposits that need more infill drilling, etc., which needs increased capex and exploration. And that isn't even including a large prospective land package they have in Mexico, a long trend that hasn't even been drilled at all. Look at recent presentation slides 16 to 19, or listen to Jason from Gold Conference last month. In addition, they've made several great improvements on a limited budget, like bringing in power, tailings operation, leach operation, and more, while working toward known higher grades and switchback, etc. Look at valuation history prior to the Nevada mining unit, which I've now touched on twice with you. If you look at Gold Resource market cap before they had, when Nevada was just a dream, okay, when all they were, like in 2016, that's all they had was the Mexican operations. If you compare the valuation to where it is now, it's ridiculous. Look at the precious metals prices. Obviously those are higher. And compare to what we have now. Reconcile. I thought that was a great comment by Dan, and what I see in that is the fact that people aren't giving the company any value really for the Nevada mining unit, and they're giving 50% of the value they gave to the Mexican operations back in 2016. Alert, free stock. I think this sums it up. And I think I'm repeating myself, but bear with me. You can buy this stock today for half of what it cost in 2016 at a time when Gold Resource only had one mine. Obviously, as I've told you ad nauseum, back in 2016, they had one mine, the Mexican mine, and the company was valued twice of what it is today. You may want to fast forward, but I'll read this to you anyway. Purchasers of GORO stock today at $3 get 2 free gifts. That's right, folks, 2 free gifts. First, you get the Mexican operations for half the price of what you would have paid in 2016, because GORO market cap today is about $200 million versus 2016 when it was $400 million. Oh, and by the way, precious metals prices were much lower back then. That alone is a great gift. But wait, there's more. You also get free shares in the new Nevada operations when the company is spun off in late 2020. You will get these shares on a pro-rata basis. That means in proportion to your holdings in GORO. If my math is correct, you will get one free share in the new Nevada company for each 3.5 shares of GORO that you own on the data record. So if you have 7 shares in GORO, you will get 2 shares in the new Nevada company. Free gold mining stock in a company who in 2021, this is the Nevada unit, has a realistic forecast to produce 40,000 ounces of gold. This company has 0 debt, 20 million shares outstanding, and will likely generate 50 cents or more in per share profit. Again, that's just my opinion. And is located in the most desirable mining jurisdiction in the world, Nevada, USA. And they have a huge, huge land package. You can go to the website and look, but they have like 4 or 5 other mining zones that they've purchased. East Camp Douglas, Golden Mile, I'm forgetting the names of the other ones, but right now they're drilling at East Camp Douglas, and it's my understanding that they will, before the end of the year, also be drilling at Golden Mile. So there's a lot of opportunity for growth, and what they'd like to do is build more mines within this package, and then kind of use their current Isabella Pearl mine as the hub, I guess you would call it, to benefit from economies of scale and synergy. They have what's called an ADR plant at the Isabella Pearl mine, which is very expensive and very difficult to build and permit. But they wouldn't have to do that if they were to build a mine, to decide to go forward with mining at one of these other locations, because they could just truck material to the hub, I guess as you would call it, and process it there. Might you be interested? Well, let me explain. Gold Resource Corporation has been mining gold, silver, and zinc for over 10 years from a reliable and profitable mine in Mexico. Started by the current CEO's father and uncle, this mine has funded the company's organic growth and generous dividend policy for the last decade. Over the last few years, the company's growth has included establishing a large land package in Nevada and building a new gold mine. Again, all of the company's growth occurred without incurring a penny of long-term debt or material dilution. They did go from 55 million shares outstanding to about currently 70 million. But that, for the mining business, is very impressive. And if you look at the increase, in the accretive increase in gold ounces and assets that occurred with that, it's very impressive. Insiders maintained an impressive 7% ownership level. And I may be wrong on this, but I also believe that not only current insiders own 7% of the company, which is huge, and which means to me so much when you've got insiders that have a big stake. They got a lot of skin in the game. But it's also my understanding that Jason's dad and possibly uncle, some other relatives, also still own a significant number of shares in Gold Resource Corporation. In the fall of 2016, I'm going to say it one more time. In the fall of 2016, long before any of the Nevada operations were established, the market value of the company was nearly twice of what it is today in October 2020. Yes, you heard that correct. In 2016, when this company had one operating mine in Mexico, the value was 2 times what it is today, when we find the company with 2 producing mines. And the Mexican mine is still a great operation today, just like in 2016. Final slide. As I was putting this together, they announced their Q3 2020 production update. So the company announced how many ounces they produced in the third quarter, which was very exciting. Great news from the company with almost 8,000 ounces produced from the Nevada operations, which was a record, and less great news from Mexico with almost 5,000 ounces produced. The company suspended 2020 guidance because of the COVID pandemic, but general consensus is that the Mexican operations average about 6,500 ounces per quarter of gold production. So why the quote-unquote miss? Well, if you consider the fact that the mine was completely shut down for April and May and only allowed to reopen in June, there must have been some spillover to the July, August, September months. They were in the process of restarting the mine and still dealing with COVID during Q3. In fact, they mentioned they had 29 cases of COVID at the Mexican mine during the quarter. The logistics of running the mine safely from a COVID perspective, on top of everything else, impacted Q3 production numbers. And for that reason, I will give them a pass. It really wasn't that much of a miss. 6,500 to 5,000 is not, is not good, but not like crazy bad. Now what I believe is they've gotten the hang of running the mine in the COVID world. I predict the Q4 Mexican production numbers will be much more in line with what we have come to expect in the recent past. And finally, Nevada. I think by most all accounts, the Nevada production numbers for the third quarter of almost 8,000 ounces of gold exceeded expectations. And the timing could not have been better. 8,000 ounces is real close to 10,000, and the production numbers will continue to increase with the mining of the higher grade Pearl deposit. 40,000 ounces of gold produces a lot of per share profit for a company with 20 million shares outstanding. That's a typo, 20 million shares outstanding, which will be the anticipated number of outstanding shares for the new Nevada operations, which should be spun off by the end of the year. Great job, guys. So that wraps it up. I appreciate you listening. I had a feeling this might go really long, and it did go really long, but very excited about this company. There's I think a lot of opportunity, and they're unique in some ways. No debt, conservatively managed company, great history of making profits. I'm excited about it, but you never know what'll happen. Gold mining stocks are speculative. This thing could double in price, or it could lose 80% of its value. That's just the way things go, and there's a lot of unknowns. The price of the stock will be definitely affected by the price of gold, and that's obviously beyond the control of the company. The company was negatively impacted this year by the price of zinc. They do produce a lot of zinc at the Mexican operations, and with the depressed zinc prices and the higher zinc treatment cost, it kind of compressed their ability to make any money off zinc, and definitely impacted their ability to make a profit. So, there are factors that are out of the control, but in terms of factors that are under the control, and what I think, positive attributes for a company, these guys do a great job, and I'm excited about their future. And thanks for listening, and I hope everybody has a great day. If you have any comments or questions, don't hesitate to leave them in the comment section below. Thanks.